Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Chris Vermillion, Chief Market Strategist at technicaltraders.com. Welcome back, Chris.
Hey, thanks, Ivan. Always a pleasure.
Yeah, always a pleasure having you come down to Wall Street Silver. I wanted to get you on to talk about everything that's happening in the market, gold, silver, all the extremely interesting stuff that's happening with the US economy, the world economy. Let's start off with gold and silver. Where do we had that run up a little while ago, not too long ago for gold, and you've seen silver play the catch-up game. Where do you see gold at right now, and where do you see it moving forward?
Yeah, if you give me permission there, I'll share my screen. But gold's been doing very, very well. I like the gold chart in terms of the price patterns that it's been forming. If we take a look at the gold chart, I'll show you what I'm seeing, which is a series of bull flag patterns. And
Yeah,
let's
you
pull the
can sh- you
chart. Here you
you can
go.
share now. There you go.
Yeah, so if we take a look at the gold chart over the last really since 2023, it's a series of bull flag patterns, meaning the market rallies up, it pulls back, it rallies, pulls back. Uh, More so recently, it's had a nice run and pause, a series of
Right.
smaller bull flags. This is a very, very bullish chart pattern. This is pointing to 2600, 27 or 2650, 2750 for gold. And that's pretty much over the next like month or two. I think it's imminent. I think we're very close to seeing gold break out and start a rally. Now, a lot of times when you have a very clean chart pattern like this, you can get a bit of a fake out, meaning gold might start to break down. It might break some of these lows if we were to zoom in a bit. It could pierce these lows there and this one. And
Right.
if it breaks through those two lows, there's a lot of people, short-term traders, who have their stops there. And
Right.
so we could see it break those. It'll trigger the stop orders, which are usually automated, and it creates a flood of sell order. We could see a sharp drop in gold, and then it rebounds and then starts that rally. And it's called a fake out. The market's trying to shake out the longs before it goes long to the upside. So I like gold from that regard. Silver is very similar. It's pulled back a little more aggressive just because it's more volatile. But again, it's a nice pullback to the 50-day. It's trying to find some traction here.
It
I
looks
think it's
similar to the gold one.
it is, yeah. I mean, they're all very, very similar. It's a strong rally, controlled pullback, and it is pointing to 34 and $36 an ounce. So there's some really nice upside potential in silver. It always has more percentage potential than gold. It's a fast mover, so I like it. I mean, it's I think we're very close. I think any day here or any week we're going to start to see it run higher. Silver might have a little bit of a shakeout. It might do the same. If gold does it, silver will most likely do it. They tend to
Right.
kind of copy each other. So it'll be interesting to see how that unfolds. We have had a couple big selling volume days, but silver is actually holding up very well, in my opinion. So that's a good sign. Maybe the market's trying to flush down and there's too many people accumulating it. We'll have to see. But silver is still pointing to it, a month and a half from now, I think we'll be up at 34, $36. So it's a nice potential play. It's a shorter term trade. I do
Right.
think eventually we'll see it pull back and it might be at this value again, 6, 8 months from now. If the stock market corrects, it'll generally pull precious metals down. So to me, precious metals is a buy signal for the next month or so, or 2 months. Intermediate term over the next 6, 8, 12 months. I
Right.
think we could probably pick gold and silver up where they are again, like right now. And then I think like sometime late next year will probably be the big run where precious metals really start to rally. There'll be blood in the streets. There'll be all kinds of financial crisis, people moving to physical currencies and probably cryptos because they're worried about the banks and all that
Right.
stuff. And gold miners will want to take off and come to life. So
Do you think the reason why gold and precious metals is having such a great rally this past year is because it's sniffing out like the horrible monetary policy at the Fed, or do they just
probably.
see it do they just see instability coming with more banks, or what do you see there?
Yeah, I mean, we're seeing a lot of central banks pick up gold, right? They're accumulating. Uh, I just heard a clip there about how in Canada the banks are stockpiling. I think uh, like $4 billion, or I can't remember what it was. It was ridiculous, huge money. They're stockpiling cash because they see a real estate crisis coming.
Really?
Um, yeah, so they've done it, I think, 4 quarters in a row. Each quarter has broken a record for the most stockpiled cash, and each quarter
Right.
is bigger than the last one. So right now the banks see something we don't. I mean, I think I see it. I mean, I know the banking system sucks. They have no money. They borrow, they lend it out, they leverage it.
Right.
They're going to be holding a basket of real estate and investments that are going to, people aren't going to be able to service the debt. They're going to be stuck with mortgages and home prices below the value that they have for the debt. So it's going to be another financial crisis. And that's why they're stockpiling. And that's probably why we're seeing um, Bitcoin, cryptos in general. We're seeing gold move up, silver, because people, I mean, there's going to be bankruptcies. Banks are going to go probably bankrupt, more so in the States because there's thousands of different types of companies. They're all private.
Hmm.
Canada's a little more, they're kind of almost like a monopoly. I don't think
Yeah.
the, but yeah, it's ugly. And I think investors see that. I mean, that's what I see happening. I see a complete financial chaos, and it's going to be an opportunity for those who know how to take part of it. So
Now you're saying like there will be eventually complete financial chaos. What sector do you think it'll hit first? Like, will it just be the banking sector, or will it be commercial and then banking, or how do you think the dominoes will fall?
yeah, that's a good question. I think we're going to start to see. I mean, sales are starting to slow down. I just saw that
Right.
this morning in the news that SP 500 sales they think have peaked. Businesses are slowing down. Unemployment's starting to rise. It just broke a 24-month. There's actually a chart here that shows this real quick. Typically, whenever we get this red line, which is a 24-month moving average, when unemployment crosses it, we go into a we had a pandemic crisis, the great financial crisis, tech bubble, like multiple.
Right.
So we're starting to see unemployment go up, which means people are going to run out of money. 70% of Americans, and I think it's the same for Canada, live paycheck to paycheck. So if they start losing their job, they're never going to be able to pay for their mortgages or rents. And people who are renting the house to these people now don't have the income to pay for their rental property. And then
Right.
the dominoes works its way up to the head of the snake. The banks are going to be left holding it. All the signs are there that I think we're going to start to see this pick up speed. It's interesting. Government jobs, a percentage of job openings. Every time we see government job openings start to spike and rally, we go into a financial crisis of some sort.
And it's
And
that
they've been
more
rallying.
spiking. Wow, that's so weird.
And it's crazy because as the government keeps like trying to like make everything sound good and the economy is strong and we're good, and they're literally creating more jobs to try and keep everything going and make it
Yeah,
look
yeah,
good.
yeah, yeah.
The unemployment is still going up, even though they're creating huge amounts of jobs to try to like cover up the weakness. So
Or
there's a
there's
lot of
like
things.
I heard that even in the jobs report, there's like it does you have to really dig deep, but look that people like are working second part-time jobs and some stuff like that that they don't
Yeah.
show on the surface.
Yeah, and this year we saw finally like people have burned through their savings. The COVID bubble of all the savings they had, and now we're minus pretty big numbers. So people have burned through their savings. And so you said, how are the dominoes going to fall, Ivan? I think I don't know exactly how they're going to fall, but unemployment going up, people stop paying their rent, stop paying, they're not able to pay their mortgages.
Right.
It's going to trickle through eventually to the banks, but I do feel like the stock market will be already headed down well before that. The banking sector, I think, and regional banks are going to get hit very, very hard, but probably not a little bit till later in the bull market. I don't think they're going to maybe be the first to go. Believe it or not, I think the tech space, when that bubble bursts, I think there's going to be a feeding frenzy of people like panicking to get out.
Right.
Because a lot of people who are chasing the big tech bubble and paying the prices now, I think are a lot of the same people who always have bought near a high and they've suffered huge losses afterwards. So once that the masses start to panic, the stock market's going to get hit first. The real estate is always lingering later.
Right.
And it takes a while to click in for the masses to realize the banks are going to get hit. I mean, we're reading about it now, but the general public doesn't really, they're not, in tune to the markets as we are.
Yeah. Yeah, and what do you guys do at the technical traders? Like I know we were speaking about it in recent interviews, but for the audience, explain to them what you guys do.
Yeah. So what we do is we follow price action, are 100% driven on position management and following price. So we identify individual indexes, the stock indexes, bonds, currency, um, and we rotate our capital into whichever asset is moving up, meets the criteria that has safety and trends in place and momentum. And so we trade only ETFs. And we're under the philosophy that, hey, we're only going to hold asset that's going up. If nothing meets our criteria, we move into an ETF called BIL, BIL. And so we collect daily interest, we collect a monthly dividend payment. So we're still growing our capital, generating income while we're waiting for an opportunity to get into the markets. I call it
Right.
revesting. And that's because we take our money, we reinvest it into a different asset. We hold one asset at a time. We're either long the stock market, or we're long bonds, or we're long the dollar index, or we're in cash. And that way we're not diversified, because there's nothing worse than making 10% in a stock moving up, but losing 10% on your bond position moving
Yeah,
down.
yeah.
You made nothing.
Yeah,
So
yeah.
diversification to me neutralizes all your upside. So we just focus on upside.
Awesome. Yeah, that's fantastic. And I'll put your guys' link in the description as well, so that way everyone can reach out to you. But Chris, it's such a huge pleasure having you always come down to Wall Street Silver, and we're super excited and watching everything that's happened in the precious metal space. So thank you again for coming and explaining everything to Wall Street Silver.
Yeah. Thanks, Ivan. Always a pleasure.
Awesome. Talk to you soon.